Hello. Yeah, here's an example just to uh, reinforce what we have learned in chapter 4, especially when it comes to bank reconciliation. So here you've been given an example of of a business where they have an account with the bank, and the bank charges $2.50 each month for any returned or canceled checks, and they also charge $8 as maintenance fee if a customer's balances drops to below $750. Then we have a customer with the bank. Donna Sands prefers to have copies of a canceled checks for preparing income tax purposes or tax returns. And she has received a bank statement that's at the end of the month showing a balance of $535.85. And Donna also received a $2.68 interest and has also been charged for those canceled checks and maintenance fee. And then the foreign checks were outstanding. We'll be given the numbers of those checks and their respective amounts. And then, of course, there is also a deposit of $765.69 was not recorded in Donna's bank statement. So, in other words, that is a deposit in transit. So, by the time the bank was issuing the bank statement, they had not recorded that deposit. So, the deposit represent a deposit in transit. And then, of course, the checkbook balance is $806.94. So the good thing about this example is you've been given the chart that we just need to plug in the item descriptions and the amounts, and hopefully, again, we do this correctly, then the reconciled balance on the checkbook balance should match the one on the bank balance. Because remember, again, the idea behind the reconciliation is we use this as a control mechanism to make sure that the farms or the business cash is under control, and therefore there's no mismanagement or employee fraud when it comes to uh, dealing with the cash. So, of course, we start with the balances for both the checkbook and the band in the bank, and this has been given to us. The checkbook balance is given to us as 806 and 94 cents, and we have been given the bank balance is given to us, and we are told us 535 and 85 cents. And then we need to add something again on both sides. We just need to identify those transactions that affect the checkbook balance to go up, and identify those transactions that will cause the bank balance to go up, and do the same thing that cause those accounts also to go down. So in other words, we're trying to identify those timing differences, that we talked about. And of course, if there's any errors, we also need to uh, 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 identify the errors and, of course, fix those errors. But in this case, I don't think there's an error in the problem. We've not been told about, no, I don't think we have any error there. Mostly it's going to be timing differences. So what items are going to cause the checkbook balance to increase? In other words, we are looking at the items that are shows up in the bank statement, but for some reason do not appear, or they are not accounted for on the checkbook balance side. For example, remember we talked about if you go run through the problem, we know that an issue to do with, for example, the maintenance fee is going to show up on the bank side, but it's going to affect, of course, the checkbook balance side, but they don't increase the checkbook. They basically reduce the checkbook, but it's an item for us to identify. uh, if you walk through again, there is an interest. For example, donor received a $2.68 interest and has been charged for the cancel and maintenance fee. So the $2 interest, you see, the bank already shows this amount in the balance. So this is reflected in the 535.85. But again, as a customer, you're not aware of this interest until when you receive the bank statement. For that reason, we need to identify the interest and add this interest to the checkbook balance. In this example, it's given to us, it's $2.68. And check if there's anything else. I don't think there is anything else that affect that will cause the checkbook balance to go up based on this information, because the $8 is going to reduce, uh, the $2.50 is going to reduce. For that reason, I don't think there's anything else. So what about what it will cause the checkbook balance to go down? For sure, the $8 maintenance fee is going to cause the checkbook balance to go down. So we have $8, and we also have the $2.50 that was given to us for the returning of the canceled checks. The bank charges that fee. So identify the canceled check, that's the item name, and the amount for this we have been given is $2.50. Again, the way the assignment is structured is, you we have to sum up all the deductions together and then subtract them again using the second column. So the same thing, if you had more than additions here, then you'll have listed all the additions on in this section, and then of course the subtotal moves to the right column and so on. So just make sure you identifying or finding the subtotal first before you can even list it in the main column. So $8 and 2.50. Again, we know the subtotal for that, it's $10.50. And then the subtotal, if you do this again, the subtotal we've been given here, the subtotal will be, now you'll take the 806.94 and then you add the $2.68. Again, if you do this math, right, this will come to 8809.62. And then of course these are our deductions. Our deductions is $10.50. So 809.62 minus $10.50, and that gives us our total balance of 799 and 12 cents. So that's what we end up having as our reconciled balance on the checkbook side. What about on the bank side? We know the balance is 535.85, but here's anything we need to add there and subtract. Of course, it's true. Again, you just walk through the problem, identify the transactions and the effect of those transactions on the reconciliation process. We know that we were told earlier, uh, what needs to increase this amount is that deposit in transit. So we've been told there's a deposit in transit of 765. So in this example, we have a deposit in transit, and for how much? For 700, for 765 and 69 cents. Anything else that will cause the bank balance to go up? I don't think so, but just make sure there's nothing else. There's nothing else there, and therefore our total will be, we add those two values, the 535 and 85 cents and the $765.69. And again, if you add those two values together, uh, this brings a subtotal of $1,301.54. And then any subtractions or deductions that will cause the bank balance to go down, of course, yes, there are several of them. Remember, we were told there were also some outstanding checks, and we've been given several of them, the check numbers and the amount. So we need to add all the outstanding checks. So we're going to identify the outstanding checks with a total for that, get a total of those values. So we need to take the 121 and 16 cents as one outstanding check, add to the other $106.30, and we also have to add the $210.12, and the last one is the $64.84. So we add all those outstanding checks, then you get a total value of $502.42. That's the total value of all of those outstanding checks. Anything else that is going to reduce the bank balance? I don't think there's nothing else from the problem. That's it. Then, of course, our reconcile bank balance will be, we take the $1,301.54 and subtract $502.42. And if you do so, you end up having a $799.12 as your reconciled value. Again, in this example, you can clearly see that the left side is matching the right side. So the checkbook balance matches the bank balance. Again, this is just an indication that our reconciliation has worked out and the two balances are matching. For that reason, again, we don't have to go back and look at where the error is, because again, this example is just, it's perfect, it's matching what we are trying to do. Otherwise, if you could have done this and find out, these two balances are not matching, then it clearly, again, you just have to go back and review the problem again and see whether you can pinpoint every single item there that has been reflected in your reconciliation. So again, I hope this information helps, and feel free to let me know if you have any questions on the homework. Thank you.